Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is, where are we? It's Wednesday. Can't talk too long here today. I do have class to get to. Wednesday is level 3 group tutorial, so we're going to talk about stop management this afternoon. Should be lots of fun. And of course, getting deeper and deeper into the harmonics course material everybody has to have read before we get into that week. So they're super busy right now. Wednesdays is it's a fun day for me because I get to just sit in the daily brief and kind of heckle from the cheap seats. I ideally like to have Kevin in particular, because he's so awesome and he kind of volunteered. But I love to have that. We have a group sort of stock options and warrants kind of picking club on Tuesday evenings. We get together and then Wednesdays, like I said there, Kevin, he comes on the daily brief and he does sort of a nice summary of what we were looking at last night, which is totally value added for the site. Hell, we were talking about a warrant, and as we were talking away, I was like, this thing is a screaming buy. And the thing jumped like 10% just as we were talking about it. It's beautiful to watch. And when I want to buy something, W's, that kind of stuff, if it moves 10% away from that, of course, you can't chase. But that's great, right? Because that just shows the validation of the actual W, which is just music to my ears. So not only are the ideas that come out of the meetings on Tuesday evenings is super valuable, but then us reviewing it Wednesday morning and then talking through the trades and the ideas. I mean, there are people that pay like literally thousands of dollars for this kind of fucking research, and we pretty much just give it away. But the whole point here is we don't give a shit whether you buy or sell anything that we talk about. It's your money, right? What we really want to do is we want to make money with our own money. So we're kind of like, hey, is that a buy? Oh, yeah, looks like, okay, well, let's go. All right, gonna make some money. Let's see. What are the odds of doubling our money here? Yeah, pretty good. All right, let's go. That kind of thing. No vested interest. Couldn't give a shit whether you buy or sell any of the stuff that I buy or sell. All I want to see is my account balance go up. And I bought something even through the daily brief here today going up. A big smile on my face. Perfect. And actually we have a fun sort of challenge here. I would like to be able to do kind of like maybe we'll call it like a karmic piece for the community, where and really I did entirely just ask the site for volunteers. Going to put together a nice little spreadsheet of, say, the top 100, 200 cryptocurrencies, and just simply go through the entire list from top to bottom and just on a spreadsheet denote all the levels, double bottoms, double tops, 50% rules, target objectives, 2 to 1s, blah, 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 blah. And I think actually, you know what? I wouldn't mind doing it as like a public video. I mean, maybe we'll keep the spreadsheet internal inside TRI. But hey, if you want to pop in and just watch us, probably just make it a public video. And if we're really lucky, and the research is of the value that I think it is, hint hint hint, I do believe there's a lot of bottoms coming in here. Be ready. Hopefully this video goes viral, and we just simply show the world what PMA looks like. What doing shit for free looks like. What being a good person looks like. Not the fucking buy my hyped up crap story looks like. Hey, I kind of think I can make some money for myself. If you want to join me, great. If you don't, no big deal. Kind of world looks like. Wouldn't that be nice if we could move into a world like that? And you know that the downvotes are going to come. It's terrible, right? All the shillers. There's one funny little Doge shilling community. I go in there every day and I remind them the rule is Doge is a buy below 40 sats. It probably pisses them off to no end, and every time I do a video, they make damn sure to come on my videos and downvote them. But, that's the difference between somebody who's got some sort of agenda. Why would they want you to buy Doge all the way up here? Clearly, there's some sort of plan going on in the background, and they're probably hired employees, which is the worst part about all of this. Versus somebody who's like, hey, I want to make money from trading, and I'm not going to buy Doge here. What are you, on drugs? All right, so let's zip into our summary. Hopefully maybe 10, 15 minutes. And like I said, if you'd like, keep your eyes open for that public video we're going to do tonight. But the people that I'm going to be doing it within the Hangout, of course, are our TRI people. So public, you can watch if you want. Breadth pointing up, so that's encouraging. This is a very typical sort of sell in May and walk away. We talked lots about the sort of tax implications of what was happening. Hell, I had to, and I got another fucking tax bill that I have to pay here in June. I mean, they hit pretty damn hard. I mean, it's just payment after payment after payment to these mafias. So I would imagine a lot of the world is feeling exactly the same. And I might argue that half of the reason why the feds and stuff justified the complete dilution of the currency base was because they had to have these prices up, or people would not be able to pay their taxes, and the whole damn fugazi starts collapsing. The irony of it all is they can keep printing more and more and more and more and more dollars just as long as people keep paying the VIG. Then the banksters get their percentage annual return and they're happy. It doesn't matter about the value of the underlying asset. The only thing that matters is the annual percentage rate of return. So, interestingly enough, with asset prices bid up as much as they have been, I don't know whether there's a lot of incentive to keep bidding up prices. Look at this beautiful trade. Kevin, look at that. Damn, stone cold. I mean, literally, I was talking about this morning. I kind of embarrassed one of our site members. I was so over the top excited about this thing. Anyway, it's kind of funny, but it was a contribution by one of our site members, and I was over the top excited about it. It was just such a perfect looking setup, so super pleased that I stepped in there. Point here is, where are we here? Yeah, this is the screen I think I like to talk to you guys about. Yeah. So, once upon a time, in a crazy ass sickness world, what the hell's going on? I am still a US dollar bull, and of course this sounds very redundant, boring. Brian G's message always stays the same. If anything, please respect that. I am a consistency type of guy. If I started changing my message, that's when actually you should start being concerned. Having said that, sure looks to me like these lows are awfully vulnerable here right now. We haven't broken down per se, but I'll tell you, man, it's not looking optimistic. That's for damn sure here in the short term. I did buy some calls through here. Was feeling pretty good. Maybe a little cocky, and of course now all those call options have fallen dramatically in value. But the good part about this, of course, is that I told you guys I bought 2022 call options. So we're halfway through 2021. Who knows? By the end of the year, we might be right back up top. Tough to say. Having said that, in the short term, there is no bottom here working, and we still got to be thinking lower highs and lower lows defines a bear. This helps things. Of course, the commodities have been going absolutely nuts of recent. So, the lower highs and lower lows out of the US dollar index helps that story. I've heard a number of people in the marketplace start to talk about how they're kind of getting a little worried about high commodity prices and whether they'd actually be sustainable over time. One of our site members told us a little bit about he was privy to some insider industry information about the construction industry and the lumber industry, and they're kind of thinking that maybe this was indeed a short-term aberration. Also hearing too that, believe it or not, the OPEC members are actually saying that maybe oil prices are a little too high and they actually need to start increasing production to bring those prices down. It's surprising. Imagine that. So, I don't know. I get a funny feeling that these lows are going to hold, but at the same time, too, that's just that low is too vulnerable. A nice little FU against these lows. Really wash out the weekends. Probably hold this bottom here. Notice that, gee whiz, this is a funny looking bottom over here. Take out this low. Take out this low. You notice, gee whiz, there's a funny looking candle body low. Nice wick down in there. Let's see, maybe we'll go in down and play in that. What is that? 88.60. Wow, that would really freak people out if they saw a print below 89. So here we are, 89.92. So this thing could still lose 120, 130 points. And not technically be broken down. But at the same time, too, still, this thing's got a head of bearish steam ahead of it. In front of it. So, until this thing actually does start officially Wing, I don't think you really should be expecting any uppy. Simple as that. Tough, I'll tell you. Because this really does question my whole sort of philosophy of U.S. dollar maintaining its hegemony here through this transition window of generations. It might not. Anyway, only time will tell. Never put yourself in a position where any one trade's going to destroy you. Just makes sense. Me personally, long a whack of crypto, long a whack of Canadian dollars, and ironically enough, damn Canadian dollar just keeps going up day after day after day as a sort of almost like a commodity proxy. As the commodities keep moving higher, Canadian dollar keeps moving higher. So go figure, eh? Yes, I am long a whack of U.S. dollars, but balanced approach. And interestingly enough, I'm also long a bunch of stocks that will do well, i.e. gold stocks, silver stocks, junior mining stocks. That will do well if this thing does crap out and we go into hyperinflation and these prices of these assets just all go through the roof. So just make sure to have yourself balanced. I've told you this before. I do like the idea that this is turning on a longer term basis. It's going to probably take a hell of a long time for this damn thing to turn if it is going to turn at all. And of course, the ultimate FU is dump through these lows, panic, freak the public out, the end of the world, and of course, Bitcoin is $100, $200, $300,000 a Bitcoin. Willy woo. Believe it or not, that's totally on the table here too. Welcome to the 21st century. Alright, enough prattling on about that. Stocks, if we do go into hyperinflation mode, I would expect stocks to continue melting up. I would, if we were living in that old world, there is no fucking way you could justify $60, $70 a barrel oil. I mean, it's just not realistic at all. But you go and dilute the currency base by 2-3 fold, well, so maybe that's really $20 a barrel. Or, divide by 3, that comes out to what? $22, $23 a barrel. That, to me, feels more sort of accurate. $60, $70 on a relative basis, no, I don't think the market's that strong. I think it's just the currency is... the whole fiat currency system is broken, it's collapsing, and this is the end result. Hyperinflation, $60, $70, $80. Basically the middle class, all the baby boomers that saved all those dollars, they were programmed to buy U.S. treasuries to pay for their retirement. They figured, all right, I got a couple $1 million and save in bonds, nice and safe and secure. And that's going to give me a nice, $50,000, $60,000 a year annual retirement suppance. I'm good to go. And so the fucking powers that be, they just triple the cost of living, So that $50,000-$60,000 a year income off of those $2-3 million in saved bonds, that doesn't even pay half, maybe even a third of your medical bills in retirement. Sad. We say the market's job is to inflict the most amount of pain on the most amount of people, the most amount of time. Considering the baby boomers are still, I think, to all intents and purposes, the biggest population block in our society, and they basically saved their money, sold all their equity, bought government bonds to pay for their retirement, to now see those bonds basically start trending down in price, so they'll be trapped underwater. That would make a lot of sense to me. And then also, too, that's going to drive interest rates much, much higher, which in essence should bring an end to this whole sort of free money socialism kind of bent. That should kill that movement as well. So it's like a double-edged sword. Everybody's going to get fucked here. Yay, party! Try and hold in there. Like I said, probably the best thing to do is just have a balanced approach. Some gold, some stocks, some US dollars, some euros, some Bitcoin, some cryptocurrencies. Don't kid yourself, crypto kids. You know that, when they pull the fucking carpet out from underneath this crypto market, it can get extremely violent and often very painful. Don't kid yourself here, crypto kids. I hate this about crypto. It's weird. Like, you go through this phase and it's like, no, we're bulletproof. Nothing will ever derail us. 100% long crypto, YOLO, right? And then you have to go through this, and it's just such a fucking pain to go through this and have to day by day watch each and every one of you blow yourselves up, and the desperation. I hate it about this crypto space. So don't kid yourself here, people. When this phase is over, right, then we'll go through this phase. So right now, I don't think you have to worry too much, but we've done some technical damage here. If anything, it's probably better that they rip the Band-Aid off nice and quick, get the technical damage done, and then we can start going and forming bottoms and getting ready for our nutso insano into the end of the year. So, point being, just try and have a diversified portfolio. This shit's going to be just as volatile as anything else. Anyway, blah, 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 blah. Trade-wise, I'm a little concerned that the gold market has been sort of moving one-directional for quite a while. And, here we are coming up against a previous pivot high. What is that? About 19 and a half. And that makes sense too, right? A couple grand. That I think is psychologically an important sort of inflation pivot. Keep in mind, the gold price bottomed between $200 and $300 an ounce back in the 1990s. So here we are, tenfold increase. Sitting at around 200, 10 times 200. That would make sense. So in essence, remember I've told you about my Subway sandwich analogy. I actually would make the argument that, yes, gold bottomed at like 250 or something like that back in the end of the 90s. But really, I think you could probably say like 300, 350 was probably a half decent sort of floor. So here we are at 2000. What kind of multiple is that? 2,000 bucks divided by 300. So, there you go. Who's driving this bus? You tell me. That's great. So, the interesting thing about this is I do like that sort of are prices like about 6 to 10 times what they were in 2000. My Subway sandwich indicator, I used to tell you I used to go get a 6-inch tuna on cheese. It cost me, I think it was about $2.50. So I went to Subway just recently, and that same 6-inch sandwich was about, let's call it $8. So 8 divided by 2.5 comes out to 3.2. So maybe that Subway sandwich has to top out at like $16. I don't know. Interesting. Anyway, shake it. This has been quite a bump up. I mean, even at $2,000 an ounce for gold, that's acknowledging that, in the past 20 years, money has lost 5 to 10 of its value. How do you say that? I don't even know. It's like money is 1/5 to 1/10 of its previous value, or 1.666 of its previous value. I suppose one might argue that if that Subway sandwich indicator is correct at 2.5, maybe this $2,000 is a little bit expensive for gold. Maybe gold's got to come back to $1,000, right? 1,000 divided by, what was it? 300? Well, there's your 3.33. That's still not, 3.2. Okay, so we're getting closer. So it'd be interesting to watch. Does the Subway sandwich top out at $8? If it does, then that means that the gold price probably is a bit too expensive. The gold price needs to come back down. If the gold price is real, then that Subway sandwich really should be about $15 to $20. So, interesting food for thought there. And for whatever it's worth, I don't mean to be rude, but, if you look at this chart, you tell me, is this thing susceptible to any kind of pullback here? There were lots of people on the site that were like, yeah, this is a massive bull ABCD, Brian, and it's going to take us to the moon, something like that. The irony of it all is I don't even know if we're even done the crazy money printing. But, I do remember years gone by, people have been talking to me, well, Brian, really, your gold should be about 2,700 here. So, it's kind of a funny place, just sitting at right around $2,000. I could very easily see it come back down to that $1,000 area if the Fed... let's see. Do lumber prices really top out here? Does OPEC get its act together and get control of the crude oil market and calm things down here? That's sort of the scuttlebutt right now. Does the Fed even say, well, you're public, you're clamoring about inflation. Fine, we're going to start normalizing interest rates. We're going to basically take away the bid from the bond market. Which I think is what's going to happen here. And long-term interest rates are going to just ratchet higher here. If that's the case, then I think, the case for $1,000 gold, probably maybe like some, you could even sort of see it now. I mean, gold bugs, they would hate for me to say this, but you can see the potential head and shoulders here. Which would again mean that, we have to come back down to that $1,000 area. That turns out the Subway indicator was right. And any kind of counter trend rallies back up into that, $18, $19, $2,000 area are actually shorting windows. But don't show that chart to a gold bug. And I bet you we're going to get down votes just because I showed that on the screen. I don't know what's going to happen. This would be the end of the commodity cycle, interest rates rising, we have to clean the whole market up, and central bankers are not out to line their own pockets. They're actually here to do the right thing. They'll step in, defend the purchasing power of the currency, try and balance things out. Now, I don't know whether that's the case or whether they just want to fucking inflate the shit out of the old debt. They don't give a fuck about the country itself. And they want to take over. I don't know. Is the glass half empty? Is the glass half full? Are you a pessimist? Or are you an optimist? I don't know. All I'm going to say is, just same thing I said before. Don't put yourself into a position where any one trade is going to dictate your future. Just be nice and diversified. You want to own some gold stock? Okay, it's a bit expensive up here. Anything I would probably say, maybe wait for a little bit better levels. It almost looks to me like we're coming into reload short zone here. So be careful about buying too much of the gold here. Where are we here? Boom. Yeah, there you are. So 61.8, 1936, 78.6, 2 Gs. I like that level. That makes sense. And, horizontal support and resistance. And I think I showed you. Kevin's been showing the audience at TRI quite a bit lately this market symmetry study. That's sort of, and just think about it, right? The market moves in a fractal. So it's kind of like down, up, down, up, down. Right? Maybe up. Can you see the fractal? So I do really like the idea of the market running into some resistance in here. Maybe if you want to buy, wait for the pullback down into support. That would be my thinking here. Anyway, sure hope you've enjoyed today's rant. The only problem I have with the market is, as we work our way through this sickness world, we have to sort of play it day by day based on what the central planners are telling us is our reality. I've lived in worlds like this before where, sound economic policy goes right out the window. People are just thinking crisis, and you just got to muddle your way through. Again, I think probably the best thing to do is just have a nice diversified approach. Do like the idea of actually the junior market now has cleaned itself up after the big face rip up, and it's getting ready to set itself up for the next leg higher. I don't really like taking W's through trend lines. I would personally prefer that we get a W over here. So let's see. If we're lucky, that develops. And hopefully you also see, well, there's that Beamish guy talking about his crazy fractal stuff. So hopefully you see sort of shoulder, neckline, head, neckline, shoulder, breakout. And that's kind of what I'm thinking again. Got to muddle our way through June. There's going to be back and forthy here. There are a bunch of names that are all putting in bottoms. It's just that I don't want to get too over the top bullish here unless the name just looks like absolute gravy. So like something like Bitcoin, it's sort of like, it's the middle of the road. Brian, he loves his reload zones. Here we are just floating just above it. Does Mountain Man need to get tagged? I think so. So, yeah, you got the short-term momentum pointing up. And I wouldn't be surprised it's a little bit higher here. But by the time we get out of this June, July window, I feel it in my bones. There's some sort of FU that comes down, finally tags Mountain, and then we start our way back up. Terrible location here. So, like I said, it's awfully tough for me. I'm not going to come out and say, oh, yeah, Bitcoin's totally awesome here, right? I'm just not going to do it. Same thing with the altcoins. I still think that there's like one more leg that has to happen to the downside. But, over the next week or two, I could easily see a nice little bump up here to carve out. This is like a A, B, and the question is, where does C, D go? I don't know where the hell this top is, but I wouldn't be surprised if it's probably like against that level there. That wouldn't surprise me. Something like that. So, still got this kind of picture in front of me. I like reload zones. Brian and his crazy reload zones. So, this is sort of why I'm spending a lot of time today just sort of talking rhetoric versus actually any hard trade. Same thing here. I got my bids working down a reload zone. There's nothing I can do here right here on this right now. There are some ideas in the stock market, which is interesting because some of them are kind of like crypto related. This happens to be an alternative fuel stock kind of proxy. Look at that chart. I mean, that's everything that I teach, right? Don't chase. The silly little kids on YouTube, they're buying this up move. You got to wait for the reload zones. And then this is a beautiful, what they call an Adam and an Eve. You might even call that an Adam and A couple Eves. Adam, man, you're a player. Anyway, have fun with this shit, right? You might as well. So, I love when I see images that look like that. That's just beautiful. What the hell, man? So this is the kind of stuff that I think I'm super excited about when they come in. Man, I'm just slowly nibbles, right? Just back the truck up. If I'm lucky and I've backed the truck up, I might be able to quickly pop off a double, right? And this guy here, just out of nowhere, some company executive probably sneezed or something on a golf course. Somebody thought it was some sort of great cure for COVID. And boom! I got my double. I don't know. Just talking out my ass here. Point here is just put yourself in a position that when these things do start to go, you can see. Does Brian buy W's? You tell me. You know the answer to that. Look at these indicators. Look at how they look. Take a screenshot of that. Look at this goddamn fucking OBV div. That's insane when you see that. So I'm not betting the farm, but it's my job to take risk and step in, and I'm slowly stepping in on stocks here. Slowly stepping in on some crypto. Crypto names haven't quite firmed up yet, but as I said to start this video here today, like this is a crypto stock. I couldn't even get in. Look at that breakout that came in the other day, threw my bid in, and they just said, see you later, buddy. We're out of here. I mean, that's what I see happening here. And this stuff's happening all over this crypto space. So that tells me, and they always say stocks lead the commodities. So that tells me that it looks to me like they're getting ready to start forming bases here. I would also not be surprised too, especially with regard to crypto itself. Because it trades on the weekend and because it's non-regulated, don't be surprised if on like a weekend session you get these big ass dumps that break people's hearts, and we finally trade into mountain man levels. And I've got a crazy ass bid on this one at 25 G's. That's just for fun, but I could see that happen, and then by Monday morning the damn thing's right back out of there. So don't be surprised if you see that as well. But I mean, look at this. Somebody showed me this cryptocurrency this morning. Look at that chart. I mean, I'm not telling you what to buy or sell. I mean, it's just sitting. Screw it. Why don't we just end the video there? I mean, if you go back and watch this feed, I don't need to tell you anything more. That image should just speak for itself. All right, have yourselves a great day, everybody. PMA for the win. All the best, and bye for now.